Today's topic, financial planning for the early career attending physician. I usually label this maybe up to 5 years as attending. We've had some say maybe it's closer to 3. We've had some that said they still consider themselves early career up to 10. Whatever number you want to put on it, that's your prerogative. You go ahead and name that number. I love this topic personally. This is probably the most common group of clients that join WealthKeel initially in that early phase of their attending status. Income has jumped up. Life is getting exciting here from a family planning perspective or home buying perspective, or maybe it's just the awesome part of your salary having a huge multiple increase. That's also pretty cool. So in this post in particular, in this video, we're going to walk through some cash flow and budgeting, some investing, some family planning topics. We'll also get into asset protection and risk management. So really those big foundational items that you should be keeping in mind as an early career attending physician. So stay tuned. That's all coming up next. First up, cash flow and budgeting. Now, I usually don't like to name drop on my clients, but the main example we use in this section is the one and only Doc McStuffins. He is a client. If you're doubting me, I have a picture to prove it. So Doc's official with us. We couldn't get her to record a video, but she said that we can share the picture. Hopefully Disney was also okay with that. If not, this could get awkward. This section is really important. However, it's also somewhat hard to talk through the moving parts of budgeting in a YouTube video. Now, what we do have in the YouTube video in the comments below or in the notes below, we have a link to this blog post. And inside of that blog post, we also have some templates that we've used usually with medical residents, but you can build it and make it your own. The main takeaway as an attending physician I want you to get out of this section of the video and also the blog post is budgeting is not a swear word. It's not a bad thing. I know you're probably not super pumped to do it. Now, some clients do love it. Some clients don't love it. We also like to use technology to make this a little bit easier. And two of our favorites are either Tiller, Tiller, or what we call YNAB, which stands for You Need a Budget. They kind of use different methods to budgeting, where YNAB thinks more forward, and then Tiller is more of like your traditional spreadsheet, which is how I think about budgeting. But we have a lot of clients that use YNAB and they absolutely love it. In this section, the main takeaway is make sure you're actually budgeting. You don't have to go do this daily, weekly, monthly. Maybe you do it every quarter. Maybe you do it semi-annual. If you're doing it once per year, I'm proud of it. But you do want to keep an eye on your money in and money out. And maybe it's at certain times when you can feel it and you think something's not right. Maybe the credit card snuck up a little bit. Maybe you're not saving as much as you wanted, or you just kind of feel like Amazon and Target seem to be a lot more frequent than what they should be right now. Whatever your reason would be there, just make sure that you are keeping an eye on your budget and your cash flow, whether that's a weekly thing, whether that's an annual thing, you kind of pick your cadence there. But I think the main thing is you need to do it in some capacity, even as an attending physician. I know it feels a little bit easier now because you did go from 60,000 to 200,000 or whatever your jump was there based on your specialty. Probably feels good here, but I still want you to keep an eye out on where things are going. So main takeaway here is cash flow and budgeting still important as an early career attending physician. Next up, investing. So at this phase here, your income is now much higher. Now, I know that that can mean a lot of things to a lot of different specialties in the world of medicine. But at this phase, let's kind of walk through the goal of what we label as the waterfall, right? At a minimum, you always want to be getting your employer match. And I say at a minimum because really no matter what your specialty in medicine is, you should be maxing out at least one of your qualified retirement accounts. If you're in academic medicine, that is likely labeled as a 403B. If you're over in the VA, this could be your TSP. If you're in a more of a private practice, it could be a 401k. Those three are all really your first bucket. While at a minimum, you should be doing the match, and it always varies based on life goals and where you need to move things around, but you should be pretty darn close to maxing that out without almost thinking about it. So max out that first account. Even next, I think you have enough room there, but you should be looking to start to do something called the backdoor Roth IRA. I won't get into the details of it in this video, but remember with your income jump there, you likely make too much income now to go directly to a Roth IRA. So this is where the backdoor Roth IRA starts to get very important. Simple Google search will find it, but if you haven't heard that term before, make sure you make yourself familiar with it. After that phase, it could be to the point where maybe you're getting some money into an HSA. maybe your setup allows a 457B, which if this is a government 457B, think of it as a bonus 403B, 401k. There's not much thinking you have to do there. It's really a bonus retirement account. If it's a non-government 457B, it gets a little bit more complicated. You do need to pay attention to some things. I won't hit those details in this video, but we do have some 457B videos where we get into the weeds on that one as well, so check that out. And then after that, you kind of hit the next bucket, or what we call the utility player. If you're a baseball fan, the utility player is a very, very good person to have on your team because maybe they have to play center field, maybe they have to play shortstop, but they can kind of do a little bit of everything. And that's what we really label as your taxable account. If it's just you, it might be an individual taxable account. If you have a spouse, it might be a joint account. You can even do joint accounts with other family members. If it is your spouse and your state allows something called tenants by the entirety, make sure you check out that as well. But at this phase of the game, you should be looking to fill up some buckets. At a minimum, that 401k, 403b, then look towards that backdoor Roth IRA. If you still have some room there and you have a 457b, that could be up next. I could also interchange the taxable account there depending on what your goals are, what your long-term plan looks like. But from an investment perspective, keep all of those on your radar. All right, next up is family planning. I know what you're thinking. Probably did not expect to see that topic from a financial planning video, or let alone coming from a CFP. But remember, our group that we really focus on are Gen X, Gen Y physicians. So these are things that we see quite a bit. And with that, we know that physicians get a little bit later start on family planning in certain circumstances as well. Finish up college, then you have your years of residency, then you might have some years of fellowship, then you're becoming an attending, but you still want to kind of lay down those roots before you hit that next chapter of family planning. And before you know it, we're mid to late 30s, and family planning might have a few extra steps to it, and it might be a little bit more complicated than what we thought, just because time is kicked in and we're getting a little bit older at that phase. One thing to keep in mind is if you were to ever need anything like this, and IVF is one of the more common ones that we're helping clients budget for and build up some funds for that. But this is also a section where we say check with your HR department, check with what your state offers. At our last check, there was 16 states that mandate this type of coverage. Make sure you're going to the right places to see if that is available and anything that can help you on that side of things. We even get into the conversations with clients on freezing eggs and making sure that they're putting the proper steps in place just in case they would need any extra help as they start that family planning journey. So again, I know it's a unique topic, but I think it's also one that is important. And I believe, most of our physicians probably are already thinking through these things, but maybe you weren't, or maybe you're thinking, I was just caught up in the grind. I wasn't even thinking of these things. So just like to put a little placeholder there on something to keep in mind on the family planning side. Next up, insurance. We labeled as insurance updates in the actual blog post, because remember, this video, which came from one of our blogs, is a continuation of those phases of your medical career journey. The main things we're referring to here are disability insurance and life insurance, in particular term life insurance. But on the disability side, pretty simple. Your income just had a large jump. You went from $50,000 to $200,000. Your disability policy that you got in place is likely, when you buy those in training, they usually give you a fixed amount, whether that's $5,000 or $6,000. Sometimes they go up to $7,000 based on your specialty now. Just check to make sure that that actually is enough to cover you in your new role. Disability insurance is absolutely vital. I know we don't think about it like this, but as you sit there, think about it. Your biggest asset is the ability to wake up and go to work every day. Take that $200,000 and say it's worth 10 years. At a minimum, that's $2 million of future earnings. So that's why disability insurance is so important. In particular, as physicians, the fine print is vital, and you need to look for something called True Own Occ. There's currently 6 providers out there. That will soon actually cut back to 5 as one of those end up leaving the market. The list of names can update every now and then. I'll just kind of leave it to the blog post to get in there. But more of the story, make sure that you have disability in place. And if you do have it in place, now would be a good time to check in with your agent to see if you should be increasing those numbers. And if you're watching this and you're still in training, also check with something called a GSI, a Guaranteed Standard Issue. This is a special policy that you can get in place while you're still in training. And this could be very important for female physicians because it may still offer unisex rates, which is going to keep your premiums much lower. But also, if you're a male, it could also help if you have blemishes on your medical record. Keep that in mind. Remember, a GSI policy, Guaranteed Standard Issue is what it's called. So check with HR. They usually have one company or one insurance agent that can help you with those. And then the other thing is term life insurance. This would be a good time, if you don't already have some, to maybe see if you need to add some. If you're married, you probably need term life insurance. If you have kids with without a doubt, you need term life insurance. If someone co-signed on your student loans, you likely want term life insurance in place to make sure that person isn't left with your student loan burden there in that example where they co-sign. So keep it simple though. You only need term life insurance. You're just renting this. Term life insurance is very low cost, and then you can invest the difference for your future, whether that's into a 403B or your backdoor Roth or any of the things that we noted earlier in the investment section. But more of the story, as an attending physician, there is an insurance check that we need to go through right now. The two main ones here from a personal side are going to be your disability and your term life insurance. Next up, asset protection. You're probably thinking, what's that term assets? As an attending physician now, you are going to start to rapidly grow your assets. You're probably thinking, I still have student loans hanging around though. I get it. I know that's probably still going to put a little damper on things. But as we always make our joke, right? We're finally getting that big kid paycheck. So assets will grow with that. Regardless, you are a physician. You always have an extra target on your back, unfortunately. Welcome to the modern society. Call it my soccer flop. Heaven forbid you get in a car accident. They find out you're a doctor. They roll around in the middle of the road a lot more, screaming. And when we watch the replay, there wasn't much there, right? So asset protection. First and foremost, easy one, slam dunk, go get an umbrella policy. Umbrella policies are going to add extra personal liability. Don't mix in medical malpractice here. Personal, which covers your car and your home. And it's relatively cheap. For about $1 million of coverage, you're looking at maybe $250 per year. That can vary by state. It can also vary if you have some crazy driving record and you audition for Fast and Furious. It could also have some effect on the age of your kids. If your kids are in that driving range, call it from 16 to 24, they may increase the policy. We've seen some actually deny increases or deny adding the policy. Keep that in mind. Or if you have a kid that's 15 and you don't have an umbrella policy, go get it in place quickly. Umbrella insurance is an easy one. The other one only pertains to 18 states. But if you live in one of these 18 states, there is a joint account labeled as tenants by the entirety. Most joint accounts, wherever you would open them up, will default to joint with rights of survivorship, which is a great account for your estate planning. It doesn't do anything for you in the term of asset protection. But you can only have this account, which is just an account title called tenants by the entirety, in one of those 18 states, and it can only be owned with your spouse. But it is one of the best and free forms of asset protection. So wherever we can get that in place, we want to get that in place. Other ideas to keep in mind: LLC it. If you have rental properties, try to have those owned by the LLC. Here's one that most don't think about, but if you live in an area where you have snowmobiles or jet skis or four-wheelers, those should be owned by an LLC. Think about how many times you have a friend over or your kids have friends over, they're riding one of these things. Hopefully you never have to worry about it, but heaven forbid someone gets hurt on it, you are going to be in a very tough spot here. So this is where we always refer to as LLC it. Other ones that hopefully you know about this one: malpractice. Make sure you have good malpractice insurance. Make sure it covers your tail, as they label it. Make sure that if you are doing any outside work, right? You have a job with the VA, but you're doing outside consulting work that's 1099 pay. Make sure that your policy is covering all those things. If you're in private practice, make sure it's covering all those things as well. Most of the academics do pretty good with this. You don't have to think too much about it, but still make sure you have the proper plan in place. And last but not least, I put estate documents in here. Early in the game, estate planning and trust planning is probably not going to be a big part of it from a terms of asset protection. I yell at everyone, you need to go get your estate documents done tomorrow. You need your wills, you need your living wills. Depending on what state you live in, I can probably make a solid case for a living trust or what we call a revocable trust. Main thing here is just keep an eye on this as your net worth grows. This is going to be really important. And this is where it could get into more complicated trust planning, where we get into irrevocable trust and certain things of that nature. So just keep in mind asset protection, even if your assets are just growing. And actually, to scoot back to the umbrella insurance, we always start at $1 million. So even if your net worth is not at $1 million, we always start with $1 million. And then as soon as your net worth goes above that one, increase it. Because of that cost, we just can't argue having a little bit too much per se. As a new early career attending physician, whether your assets are just getting started or maybe you already have a pretty good number going, make sure you're starting to put the proper precautions in place to protect your assets. So asset protection, very important here and very important going forward as well. And there you have it, financial planning for the early career attending physician. And while we usually say that's in the first 5 years, maybe it's 3 years, maybe 10 years, really no matter where you are in your journey, those topics will apply. It's just more or less, you have to adjust a few of them. But as always, thanks for tuning in here for the last 15 minutes or so. If you have not subscribed to our channel, please do so. Also, if you click on the little bell icon, you'll get a notification every time we release new content. We will continue to provide great content to help you on this financial planning journey. Thank you so much for tuning into this video, and we'll catch you on the next one.